Super good morning and wishing you a fantastic Friday ahead. Welcome to today's episode. Three things we'll talk about: good GDP data, earnings from Amazon, Twitter, Qualcomm, Apple's new privacy/ad business twist. Stocks rose, pushing the S&P 500 to a record as investors cheered encouraging data on the economy, a strong batch of corporate earnings, and the prospect of as much as $1.8 trillion in new government spending. President Biden outlined proposals Wednesday for his new American Families Plan, which could boost spending on childcare, education, and paid leave. The S&P 500 was up 0.7%, eclipsing its record it set on Monday. The Dow Jones was also up 0.7%. The Nasdaq was up 0.2%. Thursday provided investors with fresh signs of economic recovery. The US economy grew at 6.4% rate in the first quarter, approaching its pre-pandemic size, and weekly jobless claims fell to their lowest since the pandemic began last year. In the bond market, the yield on the 10-year rose as high as 1.68, its highest intraday level in more than 2 weeks, from 1.62 on Wednesday. It finally settled at about 1.64. On the earnings bit, Qualcomm rose about 4.5% after reporting a jump in revenue boosted by high demand for 5G phones. Comcast gained about 4.3% after it posted a 55% rise in quarterly profit. On the other hand, eBay tumbled 10%, its worst one-day loss since 2016, after saying it expects earnings for the current quarter to miss analyst expectations. Twitter also fell. Twitter shares slid as much as 10% in late trading after it said sales in the current period will be between 980 million to 1.08 billion, which may miss the 1.05 billion estimate. Revenue last quarter gained about 28%, which failed to match the outsized growth reported by other digital ad peers, which is Google and Facebook. The big guy who reported was Amazon. Amazon reported quarterly profit as demand remained robust for its deliveries, cloud computing, and advertising business, capping a blockbuster earnings season for the world's largest technology companies. The company's profits in the year since the pandemic started exceeded 26 billion, more than the previous 3 years combined. Net income from January to March more than tripled to 8.1 billion, and the revenue of 108 billion far exceeded the average analyst predictions on the street. Amazon said it expects sales from April to June to reach between 110 billion to 116 billion, which would mark 3 consecutive quarters with more than 100 billion in revenue. Amazon shares were up about 3.5% after our AWS, which is Amazon's main profit center, sales for the cloud unit totaled about 13.5 billion in the first quarter, a 32% increase from the same period a year ago. Amazon's advertising business has also become a major player in its industry. The fast developing unit has put the e-commerce giant in competition with Google's and Facebook's leading ad businesses. Amazon's category that included ad sales rose about 77% in the first quarter from a year ago to about 6.9 billion. Overall, blowout numbers from Amazon. Sticking to the ad business that we are talking about, yesterday we touched upon what Apple is coming through with respect to new privacy restrictions. So I wanted to talk about it a little more in detail to give you a sense of what impact it would have to its ad business. Under Apple's new privacy restrictions, advertisers targeting iPhone users will get more data about ad performance if they buy Apple's ad space than if they buy through third parties. The difference would eventually give Apple's small but growing ad business an edge over rivals, is what the ad executives are saying. Apple's latest operating system for iPhone has set off a firestorm in the ad industry and beyond by letting users decide whether to let apps track them for advertising purposes. Changes that mean companies may soon have less data about who sees their ads. Apps on Apple's iOS platform must ask users permission to track them for advertising purposes. So when targeting users who have opted out of tracking, advertisers who buy ads through third-party platforms will have to wait 3 days for insights on their campaigns and will receive only aggregate information, such as the total number of users who took an action after an ad. But on the other hand, advertisers who buy Apple ad space can receive more data about user behavior. They can learn which version of their ads users saw and which search keywords ads appeared on. Those advertisers will get results nearly in real time. That could give Apple an edge in luring advertisers, especially if the tech company expands its ad business. Right now, Apple sells search ads that appear in the App Store and display ads that appear in its news and stock apps. So the biggies in the ad business say that Apple could become a big player in the $400 billion global digital ad industry. The company has gone down that road before. It bid in 2009 on AdMob Inc., a specialist in brokering ad sales on mobile phones, but was beat out by Google. Apple in 2010 launched its own ad network called iAd, which facilitated ad sales in iPhone apps. The business failed to catch on and Apple shut it in 2016. I found this development super interesting given the opportunity that Apple would have to open up a new line of business. So let's see how this thing develops, but certainly an interesting development to track. That's the update. Thinking of taking a break for the first 3 days of next week, so Monday, Tuesday and Wednesday. So I'll talk to you on Thursday. Stay safe and healthy in the meantime and speak soon.